Today in the livestock market, cattle was a little bit lower. It did start better, but it kind of fizzled. It just seems that there is a little bit of a wait and see from some of the traders right now. They're not sure really how to apply all the surrounding issues going into this market, and certainly to start this week. But the positive thing is that we're still at the 136 level. However, I think that it may be difficult to move higher without some significant support, or maybe an uptick in demand could help. But with inflationary issues, still, right at hand, that could be difficult. But even sideways movement, I think, is still a positive. The CVAL on the live cattle market is at 13.6, so it's a little bit lower. Now, feeders today did fall. Those higher grain prices are just pressuring the livestock futures, so it's also pressuring the live cattle as well. This puts that pressure on the feedlots to really move cattle through a lot more quickly. We're going to need, cash markets to really start to pick up in order to get the market higher. Overall, there's inflation issues, of course, and with the grains continuing to march higher, it's just so difficult for the meats as a whole. That being said, we're still, being able to hang in there and, working on that. But inflation will be playing a role as we go forward. And one of the issues to look at is that for the contract, the August contract for the feeders, we're really getting ready to test that 170 low. If we breach that support level, it's difficult to see, how much lower we'll go, but that will then put us in an area where prices are back to where they were back in November. So that's just something to watch for going forward. Now, the hogs were very strong today. That higher cash and cutouts really gave the market a lift. The production really snapped back right after the holiday and really is starting to gain back about 50% of what we lost earlier in the month for the correction. That being said, momentum is really starting to build, and we're up almost $3 today, so that's something to be watching going forward. Even though the CVAL was down 1.75% to 30.8, it's because it's a little bit delayed getting in there. But a big move up today, and if it continues to go higher, we're going to see that CVAL kick back up, and then we're back to where we were. And fundamentally, there's still some tight supplies, and that's expected to really continue for the next number of weeks and months, perhaps.